All right, hello everybody. Can you all hear me? All the Turtle members from around the world. Good evening. Okay, without further ado, let's get started. Let me first say that this is not going to be a regular feature, okay? This is a once-off ad hoc webinar because many of you guys have been messaging me about the topic that was discussed last, or rather on the last monthly dialogue session. So I decided, okay, instead of repeating myself over and over again, I thought I would do a short webinar, okay? So don't ask me when the next one will be. Don't ask me, set up a monthly dialogue session. I'm not going to do any recording. It's none of those stuff. You all know, all traders, I'm not good at this at all. So I fumble and I managed to find this website that allows more than 50 people to be in this room. Okay. Hey, hi Elijah. How's it going? Can you hear me? Can you hear me fine? If you can hear me, Elijah, type yes. At least we know Singapore is on board. Simon Chandran, all the way from Sydney, Australia. How are you, mate? Okay, Abdul Hafid, good to see you all. Okay. Let's get started. We started wasn't last week, it was on Monday, our dialogue, but with this question: does trend following still work? We all know that we have gone through probably, or at least for me, the longest drawdown / doldrum period since I've been following Michael the past 5 years. So this is indeed the longest doldrum period. It's about 8 months all in all. So just a quick show of the people that are hearing my voice. How many of you are still in the market? If you are still in the market, type in. If you're in the market, type in. Okay, fantastic. So most of us are in the market. Okay, we've got positions in the market right now. Okay, my next question is, what kind of portfolio are you trading? Are you trading 20? Are you trading 7? Or are you trading your own special 13 pairs? Please type it in now. 27 and 7, 20, 20, 13. Half 20 and half 7, okay. Frederick. Okay, fantastic, that's good. So most of us are trading 20 and 7. So am I. I'm also trading 20 and 7, okay. How many months have you all been in the market? I know some of you are in since last year, but I know also from the last dialogue, some of the students just went in 2 to 3 weeks ago. So tell me, 3 months, 4 months, 2 weeks, 2 days, whatever. I'm talking about this particular trend. Okay, 9 months, 3 weeks. Wow, fantastic. The person who entered just 3 weeks, okay, you owe us dinner, okay? Okay, 8 months. Okay, pretty much most of us, just we have strike. Our strike zone was sometime in August last year, right? That's right, Zahari. So we all went into the market August last year. What was the strike level that you guys went in? Type it in. For your 20 pairs. 70, okay, good. I went in at 470 as well. 45412. You disgusting man, Phil. You went in at 412. Okay, Vincent, 112. That's for 7 pairs. 420, 415. Very good, Julia. You guys owe us big dinner. 470, 424. 415. Very good. Okay, good. So those who went in August probably went in at 470, 480 to 460 thereabouts, okay? And depending on which batch you are, those who joined us, well, you know, they are the lucky ones. They have gone in when the equity has gone down at least 10 to 15%. So doesn't matter. So my question to you is, does trend following still work? Tell me the truth. What are you feeling now? Yes, no, maybe, not sure, whatever. Tell me now. Doubtful. Thank you very much. So far, the first honest, Julia. Lie, don't know. Thank you. It works. It works. Still believing that it works. Yes, but drawdown is quite long. Well, if everybody says that it works, then I think we don't need to have this webinar anymore, is it? Okay. Some of you are confused. Okay. Painful, yes. Okay, Lucan, I hear you. All right, good. Well, it is normal. First of all, I want to let you know, it is normal to feel whatever that you're feeling right now. Frustrated, doubtful, not sure, you know, fear, whatever. It is real. Today, we are going to answer this question, and I can't answer it for you. You have to answer it yourself. And hopefully, after going through the slides, you would be able to come up with your own conclusions. What I'm going to do is I'm going to switch over to the share screen mode now. And just now, when I switch to the share screen mode, I will not be able to see some of your messages that clearly, because your messages will be on the side. Okay, but I don't have any choice because I need to draw on the screen. Anyway, I'm going into share screen mode now. Okay, can you all see the slide? Please type yes if you can see the slide. Okay, fantastic. Okay, can you hear me just as clear as before? Please type yes if you can hear me. Okay, there may be a slide on, but bear with it, okay? All right. So, does trend following still work? Well, let's find out. Let's take a look at some of the top performing hedge funds. Now, the selection criteria for these hedge funds is number one, they are selected from the top 50 hedge funds around the world. You know, there are more than 1,000 hedge funds around the world, and there are websites that track their performance. So I'm going to choose the top 50. And out of the top 50, I am going to select only trend following hedge funds. Those who are trend traders who use a mechanical trend following system. Okay. And number three, out of that, I will only pick those with more than 15 years track record. All right. There are some hedge funds who are performing 80%, 150% a year, but they are only 2 years, 3 years in the market. And, you know, the following year, they are not even in the list. And some of them have declared bankruptcy. So I'm looking for proven systems, proven money managers with track record of more than 15 years. Now, is everyone clear on the selection criteria? If it is, please give me a yes. Okay, fantastic. So these are our comparison. We are going to compare it against the S&P 500, which is the most commonly compared benchmark. I'm also going to share with you the hedge fund index. In other words, out of the thousands of consolidated average performance of the hedge fund industry. Okay, and I'm gonna feature these three guys. Now, personally, I track them for the past, at least 3.5 to 4 years since I launched my own private fund. Have you all heard of Eckhart, Abraham, and Dunn? If you have heard of them, type in yes. If not, type no. Okay, some of you have heard, some of you have not. Well, let me tell you who these three guys are. You all should know who Eckhart is. Eckhart is one of the fathers of the Total Trader project together with Richard Dennis. So Eckhart is the other guy. Okay. Abraham is one of the original turtles. Okay. So we have one original turtle, another original turtle, and if I'm not mistaken, Bill Dunn is probably one of the turtles. If he's not, then he is one of the hardcore trend followers. Okay, I think he's a turtle, if I'm not mistaken, Bill Dunn. Okay, and Winton Capital. Have you all heard of Winton Capital? Winton Capital is the largest hedge fund in UK, if not in the world. All right, and he is a hardcore trend follower. So let's look at the list. Can you all see the list? If you can see the list, please type in a yes. I need to do all this constant check so that I know that I have not been offline. Okay, great. So you can see all the managers' rankings here, all the way from number 1. As I said, my criteria is they must be in the top 50. Number 2, they must be trend followers. And number 3, they must be in the market for more than 15 years. And the reason being is you can see the inception date. They have been around in the market for at least 15 to 20 years. And you can see their asset under management, 96 million for Eckhart. Abraham manages 166 million US dollars. And can you see Winton? $24 billion fund. Okay. Now, would you agree with me that these are the master traders that's worth looking up to and worth following? Do you agree or not? Okay, that's good. So let's see how their performance is. All right. Let's track their performance over the past 15, 20 years. Okay, let's look at our icon here, Eckhart. Can you see? This is his performance, the blue line. And we always track it against the S&P, which is this. This is the S&P. So you can see that compared to the S&P, obviously outperforming the S&P by a long shot, more than almost eight times, you can see, right? 800% better. Okay. Now, would you invest in the Eckhart Capital Fund? How many of you would invest? If you had the money, minimum investment with these people are 5 to 10 million. But if you had the money, would you invest in this fund? Definitely, for sure. Okay, great. Next. Abraham. Abraham is another one of my heroes. You can see that his fund, again, not as good as Eckhart, but definitely outperforming the S&P 500. And not just outperforming, we are talking about outperforming by multiples of hundreds of percent. All right. So the S&P made 800% in the past 20 years. This guy made 2100%. All right. So we are talking about, these are really the studs. Dunn Capital. Okay. Dunn Capital, we have heard of in our workshops. Michael has used his example because Bill Dunn is known as the hedge fund manager. Excuse the word, ladies, I'm going to mention. He is the fund manager with brass balls, okay? Because he goes through some serious drawdowns. But look, you can see that his performance again outpaced the S&P by a long shot. How many of y'all would invest in the Bill Dunn fund? Type in a yes if you're going to invest. Yes. All right. Obviously, if we had the money, right? Bill Dunn, if I'm not mistaken, he has launched 2 smaller funds. I think the minimum investment is $500,000 or something like that. His normal investment is 10 million US minimum. Okay. Let's look at the newest kid on the block, which is David Harding. He is also doing very well. His fund is relatively new. It's about 16, 17 years. But he is known in the market to be a hardcore trend follower. Again, you can see his, okay? So we all agree that these are all very good traders and they have outperformed the S&P for the past 15, 20 years. In other words, they have seen many bears, many market crashes and so on, all right? Would you agree that this is a safe statement? These are all top traders and we would invest in these funds? Ask yes or no. Okay, well, you'll type in yes very quickly. Now, let's look at the drawdown periods that these master traders experience, okay? Eckhart. Looking at his first drawdown, I wouldn't say the first, but the first significant drawdown. He took a 17% drawdown and it took him 21 months to get back to the same level as before he had the drawdown. It took him 21 months. Now, can you understand what I'm saying here? Do you know what it means by going back to water level? If you understand what I'm saying, please type in a yes. If you want me to repeat again or explain, please say repeat. It's very straightforward, right? We all understand. Okay, so 21 months, and look at this. A more recent one that happened in 2008. It took him, he had a 20% drawdown, and it took him 27 months to get back to water level. 27 months. His clients, his investors have to wait in the cave because it was so-called winter. You know, I always use this analogy of spring and winter. Experiencing winter for 27 months. That's 2 years and a few months. All right, 27 months. Now think about that. Abraham. All know that Abraham did very well. We all can see his performance, but what about his drawdowns? No problem, Brian, welcome. Just follow on the presentation. Can you see here? 24% drawdown, 20 months to reach water level. 33% drawdown, 30 months. Took him 30 months to get back to his previous high. That means, you know what this means, guys? This means if you invested with Abraham here, you would not see $1 of profit for 30 months. Now tell me honestly, how many of y'all would have put out your investment? How many of y'all will put out your investment? Yeah, most of us, yeah, that's right, Lee, exactly. But if you had pulled out your investment, you would have missed out this trend, isn't it? Can you see after 30 months, he hit a new high? All these master traders always a new high after a big winter. Do you all hear what I'm saying? After a long winter is where they will hit a new high, okay? And then you can see here another 23 months, okay? Let's look at done. Okay, done. Okay, for some of you guys with weak hearts, may I suggest you all sit down, get your blood pressure pills ready, okay? Because I told you, this is a guy with brass balls. He's well known in the market. But look, without even showing you the drawdown figures first, look, can you see that he is also outperforming markets, right? He is also outperforming the markets by leaps and bounds. But let's look at his drawdowns. 44% drawdown, which took him 15 months to recover before he hit a new high. Everybody type in new high. Can you see the new high? That's right. Type in new high, man. You all need to see this, guys. You all need to see this. I always have this trick to make sure that I am on the right track, that my clients' funds are on the right track as well. I'm also human, right? And look, from here, 60% drawdown. How many of you all are able to take 60% drawdown? Now, let me do it right now. I will not be able to take 60% drawdown. In fact, I have a circuit breaker of 85 to 40%. All right? We'll talk about circuit breaker later on to answer some of our students' questions. Die. Don't worry, Julia. You won't die. You know what happened, guys, after the 60% drawdown? What's after winter, guys? Can you type in the answer? What's after winter? That's right, spring. And you know this spring is where? A new high. Can you see that? Right? You can see the new high. Okay, from here. But it took him 93 months. Okay, 93 months. How many years is that? Do you all know? 7 years? 7 years? 8 years? No joke, huh? Yeah, don't worry, you won't koyak, okay? Just think about it. And then his latest one was a 27% drawdown, which took him 20 months to recover. Now, everybody, we know these are scary, but think about it. If I didn't show you the drawdown, right? All the other figures, if I didn't show you the drawdown, you can solve this, right? It looks scary, but if I didn't show you the drawdown, is this a wonderful graph? Yes or no? Yeah, exactly. Right? Because every time it hits a new high, and it hits a new high, and a new high, and a new high, and a new high. You see? The problem is, many of us are not able to take all these kind of drawdowns, right? So your job and my job is to focus not on the drawdowns. In other words, it's not that we ignore the drawdowns. We have to prepare for the drawdowns, but we look forward to the new highs. If you look at this graph, okay, see it also has new highs. From his beginning, new high, new high, new high, new high, and then a new high. Then he had a drawdown, yes, but look at the new high, and so on. And finally, I just want to cover Winton as well. Okay? You can see Winton. Every one of you said that you will definitely invest in this fund. Now, did Winton have his drawdowns? Yes, but it's much milder. Nonetheless, it is still a drawdown. 26% early in his career. It took him 14 months for his clients just to get back even. All right? He had a 10% drawdown, which took him 9 months. Now, his drawdowns are not very severe, but can you see that it also took him at least a year, if not more, sometimes to recover back from his drawdown. All right? So what do you think is required in order to achieve success in Winton Capital? What do you think is required? You think patience is required? That's right, Gary. First prize, second prize for the both of you, Gary and Phil. Patience is required. Even the great Winton, who is now probably the most successful trend trader in the world, Winton Capital, because he keeps his drawdown low, but even he has to go through 10, 12, 14, 19 months to recover back from the previous drawdown. Okay? Now, let's look at the numbers now. Okay, everybody? It's quite a busy slide. This is the S&P. You can see 2011, 0%, 13%, and 29%. So the stock market did well in the past 3 years. If you would average about 14% per year. Now, let's look at the hedge fund. The average hedge fund in 2011, they clocked negative 2%, and then they had 7% and 9%. Not too bad, averaging about 5% per year. Now, let's look at Eckert, Abraham, Dunn, and Winton. All right? Look at their performance. These are the 4 guys which you said that you will definitely invest in because of their track record past 15 to 20. Look at their average returns. Right? In other words, what I'm saying is, if you are investing with Eckert, if you invest with Eckert, this means that every year you lose 4%. Every year you lose 4%. This is about 3.5%. And if you invested with Dunn, your average return would be about 5%. Not much better than the fixed deposit in Malaysia. And Winton, remember the darling, the #1 super duper trend trader? He just clocked an average of about 4% in the past 3 years. Okay? Who is this? Who is Wisemann Capital? Anyway, not important. So, how many of you all can see a message here? Right? Can you all see a message here? Thanks, Lee Chi Ming. Don't worry about the Wisemann. These are actually slides that I use to present to some of my potential investors in Australia. So I thought it would be good to share with you all. Okay. I just did a presentation before I came back to KL, and the investors in Australia are slightly more exposed to this kind of industry. So upfront, they already, are banging me with questions like, "Oh, I heard the hedge fund industry is not doing well," so I have to do my homework and present it to them. And this is exactly what I presented to them. And then they agreed with me that hedge funds over the long term, they definitely outperform any other markets by a long shot. All right. So you can see here, you make your own conclusions here, right? In the past 3 years, no doubt, it is a super bull run. But how many of you all know, right now, the stock markets of the world is at an all-time high, right? Where do you think the market will go next? Right? I leave it to you to make your own conclusions. Okay? All right. Yeah. Okay. Just right now, I just want to do a check. Is everybody okay up to this point? Everybody is okay? Type okay. Just type okay. Yeah. Okay. Yes. 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 Okay. Okay. Good. All right. Thank you. Thank you. Now let's look at our curve. This is our 20 pairs equity curve. As you guys have just typed in just now, most of us entered the market around August. So did I, and as far as I know, so did Michael. We went in around 470 to about 475. Right now, we are taking a loss of about 7%. Now, if you don't mind, now you don't have to share if you are not comfortable. Please type in what is your draw percentage right now up to this point. If you're not happy to share, don't, but those who are okay to share, -20. Okay, let me just get out of this slide for a minute. I just want to go back here and your numbers. Okay, did I miss anyone? Okay, Lee Chan King, you have minus 30%. Okay, that's pretty high. Okay, Leonard, good on you, mate. Just went live. It's the best time to go in. You can basically throw your house and your dog into the market right now. Lee Chi Ming, 30%. Okay, about 20%. Ng Zefong, 35%. Boon Long, 45%. Okay. For those of you who has more than 30% drawdown, I'm talking to you now. What is the leverage that you guys are using? Please type in your leverage. Those who are more than 30%. Those who are suffering 5, 15, 20% are fine. That's the expected drawdown. Those more than 30% drawdown, can you please type in and tell me what is the leverage that you guys are using? 6.7. Okay, Lee Chan King. If you're trading 6.7, how is it that you are facing 30% drawdown? When did you strike? Okay, Lai Yang Won, you know your problem, right? You are at 20 to 1, my friend. All right, so you're 35%. So if you're hitting 6.7, you should be hitting about 12%. 15 to 1, okay, no problem. Now it's 10 to 1, okay, good. You've scaled down. I'm still waiting for, who was that? Somebody, okay. Lee Chan King. I still don't understand how you can hit 30% drawdown when hitting 6.7 to 1. Lai Yan Woon, I understand now. You're heading to 1. Okay, Chong from Sun, 35% because you're 13. Otherwise, it would be about 17%. Okay. All right. Yeah. The screen is off now because now I'm looking at your remarks. So I turn off the slides. Okay. To know what is the problem with the people who are having more than 30% drawdown. So most of you agree that you are suffering a higher drawdown because you are using a higher leverage. You are over trading. Am I right? Assume that, guys. Yes or no? Okay, that is very clear. Okay, I'm going back to the slides now, okay? So we are in the market since August. And right now it's about 8 months, okay? So what are we going to do? What are you guys plan to do? What do you guys plan to do? Joanne, wait. Hey, wait. Yes, wait. Okay. Patience. All right. Well, waiting is a very pain process. So what I like to do is I tell myself, get on with life. All right. We don't wait for the mango tree to grow and bear fruit. Nobody waits. Yes, that's right, Brian. Sell chicken rice. Go back to your job. Go fishing. Do whatever. Play a lot of golf. Now is the time you golfers should be improving on your game, on your short game, on your whatever it is. Okay. Take care of your kids. Okay. What you mean when you're having a trend the time you don't take care of your kids, is it? Okay. Just kidding, Joanne. Yeah, just get on with life, okay? Right? When you say wait, then it becomes like, oh, when now? When is going to happen? When is going to happen? Right? Don't wait. Just get on with life. Let it happen. As you have seen in the earlier track record of master traders, the day come, it's going to happen. We don't know when, but I'm telling you, get ready for the big trend to come. Okay, let's look at 7 pairs. Okay, for those of you who are trading 7 pairs, okay, we struck sometime a couple of weeks ago at about 112. In fact, Michael struck at 112. I actually struck at about 113. Okay, when I struck. So now it's about less than 5% drawdown. Is that about right? For those of you who are trading 7 pairs, is about right? Yeah, 7 pairs. You're getting about 5 2%, some of even 1%. Yeah, okay. So it's about right. So you guys are trading in the right track. Your trading plan intact. Your trading plan is logical. Okay. Don't know does not matter. Okay. Whatever. All right. So any question on these two charts at the moment? Any question? Yes or no? No questions? Okay. All right, let's talk about some questions from the student. Okay, now, this comes from Friedrich, if I'm not mistaken. He says, we'll face margin call when the equity drops 30,000 pips after the strike zone. You are right. Your account will be wiped out if you have 3,000 pips. 3,000 pips? No, 30,000 pips. 30,000 pips. Hello? Not 3,000 pips. 30,000 pips. Okay? So, what is the cut loss in terms of pips for our system? How many pips to cut loss? Everybody please type in. If you get the wrong answer, I'm going to kick you. How many pips is our reversal? Who typed in 125? I'm going to kick the guy. Oh, I missed the guy. I didn't see his name. Okay, it's 250 pips. It's 250. Okay, some is more. Let's say 250 to 300 pips. Okay, for each per cut loss. All right. Now, how many losses is there in 30,000 pips? How many times do we need to cut loss? 30,000 pips. 100 times. That's right. You guys pass your maths. 100 times. Now, those of you who have followed Michael in the past 1 year, 2 years, 3 years, 4 years, or even 5 years, in 1 month, how many times on average do we get to cut loss in 1 month? Based on your experience with Michael's system, actually we can just do a simple check on the winner circle on his daily posting, right? For the 20 pairs. In 1 month, how many yellow highlight do you see in Michael's post when he has to cut loss? And mind you, sometimes when we get out, it's not loss. Sometimes we get out with profit. Do you hear me? Sometimes we get out with profit. Assuming every single time we get out of the market is to cut loss. We are talking about 4-5 times a month. All right? So how long would it take for 100 cut losses to happen? And this must happen without one single profitable floating profit position. Okay? So 20 months, more like 200 months. I can't say it's never going to happen, but man, I'm telling you. Yeah, that's right. Okay, so I just want to see the big picture, okay? Everybody needs to know the big picture. Now, we all know what happened recently, right? Are you familiar with this number? Okay. Now, does that mean that we've stopped flying? Who is going to continue to fly? Let's type in fly. I hope you guys will continue to fly because I'm flying next week, okay? And Vivian and Michael are to Sabah this coming Sunday. Yeah, so we know that disasters do happen, but we shouldn't base our life, plan our life based on disasters. So what is the plan B? Okay, that's a good question actually, Frederick. Thank you for the question. So what is the plan B to counter this margin call 30,000 drawdown? where our account will be wiped out. Can anybody suggest anything? What is your plan B to prevent a margin call from happening? I'm saying this is very rare. It's rarely going to happen. But stop trading. MACD? No. MACD is not going to stop you. Stop trading. Okay, when you say stop trading, when do you stop trading? Reduce leverage. Okay. Okay, add capital. If you are rich, then you can add capital. All right, good one, Phil. 40% drawdown. Have you all heard of this term called a circuit breaker? Yeah, those of you who have heard me speak in Singapore and in KL, I rarely conduct the module 2 in KL, but I always do the module 2 in Singapore. You have all heard me talk about circuit breaker, right? Right. Whenever I conduct my module 2, I will usually talk about circuit breaker. Yep, that's why you can see Singaporeans saying yes. And some of you who have, engineer, well, that's right, Mr. Lee Chi Ming. So you all know what a circuit breaker is, right? Can eat one, Hey, come on, Brian. Okay, basically a circuit breaker, every house has a circuit breaker, right? When there's a sudden surge of electricity, your electric box now, you engineers please tell me if I'm using the wrong terminology. There will be a trip in your power box and the whole house turn dark. This is to safeguard all your electrical appliances. Do you all understand what I'm trying to say? Engineers, did I explain it correctly? Okay, so the same goes for your Forex trading. Your trading plan should have a circuit breaker before you let the market wipe you out. Now, I'm saying that it's very unlikely the market is going to wipe you out using microsystem, and if you have all the safety nets in place, nonetheless, you still should have a circuit breaker, okay? It can be 20%, 30%, 40%, 50%, whatever it is, you will close out all your trades in the market, get out, clear your mind, re-strategize, and then re-enter the market. I tell you, all the master traders that we saw just now, they all have their circuit breakers. Don't think that Bill Dunn doesn't have a circuit breaker. The only difference is his circuit breaker is probably very, very high. And I suspect it's around the 60% level. It's very, very rare that you can go beyond 60% and you continue to take losses because, 60, 70, 80% is basically as good as wiped out already. So everybody, the circuit breaker concept? Yes or no? Okay. I hope you guys are trading with a circuit breaker, okay? Second question. You got so much money, it's okay. Wong Ki Sing, yes, you can put it at 30%, 40%, 50%, whatever it is, right? It's up to you, okay? So far, now, do you remember what is Michael's worst drawdown ever? How many of you still remember? Can you type it in? What was his worst? That's right, 35%, right? 30 to 35% was our worst ever if you're using 6.7 to 1, okay? So if you set a circuit breaker at about 40%, it should be okay, all right? Even at 50%. Okay, let's go to the next question. If I remember correct, Michael said 20 to 1 leverage can be used. Okay, this is dangerous. Huh? If we keep the position prescribed in the 6 to 1, regardless of drawdown, it means 20 to 1 leverage where there is a 66% drawdown. Okay, do you all know what this means? This means that what he's saying is 300K, let's say, you are trading one standard lot. Okay, everyone clear on that? 300K, you're trading one standard lot. Okay, so this is 6.7. Please excuse my Picasso, okay? Now, it has gone down to $100,000, your capital. That means you took a 66% drawdown, okay, 66%. And you are still trading at one standard lot, right? This means your leverage right now is at 20 to 1. Can you see that? All right, you have taken a huge 60%. Now, this is again after exact, okay? After strike zone at 66%. Which means probably your exec from here to go down to your exec level, normally how many percent before we strike? 20 to 30%? Can you see that? So you are talking about 30%, another 60%, talking about 100% drawdown in your equity curve. Have you ever seen 100% drawdown in the 20 pairs and the 7 pairs over the past 4 or 5 years? Now we have tracked it over 15 years. I have not seen it. All right. So this is not what Michael is referring to. Okay. Now, for the person who asked this question, please listen carefully. The only time you can use a leverage of 20 to 1 is when you have, can somebody finish the sentence? Deep pockets, reserve, money, that's right. Okay, please, if you are trading $100,000 and you are trading one standard lot, okay, I'm assuming that you have set aside at least $100,000 or $200,000 as reserve. Okay, set aside. You may not need to use it, but you should at least have some reserve if you are going to trade like this. Okay, so now is it very clear now when you can use 13 to 1 or even 20 to 1? Is it very clear to everyone now? Fantastic. Last question. Okay, I have no confidence in setting the zones. My BIYD is simple. Enter when it's 5,000 drawdown, exit when it's 6,000 trend or rally. So the last exit, the market never reached 6,000 pips. The market turned and created another new low. So from the new low, she added another 6,000 pips. Again, my profit zone never met. Okay. The market again, now it seems that it's approaching another low. So my question is, shall I stick to my trading plan? So what this person is saying is, I entered at 470 and up to now, I haven't turned profit. Does that sound familiar? How many of you all are in the same situation? If you are in the same situation, please type in yes. Okay, so you are not the only one, my dear friend. Okay, so she is asking, this is basically our trader from Sydney. So what advice do you have for this student of ours? Do I stick to my trading plan? If not, what changes should I make? Can anyone give their opinions, please? We are here to help each other. Anyone got anything to say? Because basically, a lot of you guys are the exact same situation. Stick to the plan. For plan, Gary says stick. Revise the plan. Somebody said revise the plan. I couldn't see the name. Okay, Lu Bunlong say wait. Okay, fine. Now, who said revise the plan? Now, if you say revise the plan, how would you revise it, please? Use circuit breaker. Okay, Chiming, I'm assuming that this person's circuit breaker has not been broken yet, has not been tripped. The plan should include what we... Okay. So a lot of the people are saying stick to the plan, stick to the plan. Nobody seems to say, change the plan. My only suggestion to you is, maybe I shouldn't say that. I shouldn't make any suggestions. Okay, anyway, forget about it. If you know, okay, I'll just say that. Otherwise, then I'll get a lot of messages again. Okay, that's right, Brian. You said it. I would say probably reduce your rally figure. Okay? It doesn't have to be 6,000 pips. Right? You have to be a little bit flexible. In fact, 6,000 pips, who's to say it's right or wrong? Am I right? Now, how many, can you guys see in your own rally key levels, how many pips before you get out? 3,000, okay, 3,000, that's pretty low. 3,000, okay, 5,000, 5,000, about 5,000, 4,500, okay, 5,000. Now, you know what is 5,000, right? 5,000 is basically $50,000, roughly, $10 per pip, over 300K, which is your 20 pairs count. This is about what? 7%, right? Yeah. So if you have a 16% rally, I think it's probably safe that you can take profit. Now, if you're trading double, you're talking about more than 8% already. Okay. So I would say 4,000 to 5,000 pips would be a reason. What's your rally fail? Well, that take a lot more than just a webinar and a thank you to know my. Yeah, we'll talk about it when I go to Adelaide, okay? Anyway, so what I'm saying is 4,000 to 5,000 is reasonable. Now, of course, I can't say that 6,000 is wrong, okay? 6,000, everybody has their own type. You make your own decision, but if I were to give you a suggestion, lower your profit-taking level, okay? So look at the new low and maybe for this round, make less, okay? 3,000, 4,000, 5,000, get out, reorganize, look at the market again, and then re-enter. Okay? That helps, all right? Miss Wong, I hope that helps you, okay? Okay, any other, one last round here. Any other questions? I'm going to go back. I'm going to go back now. Stop sharing, get back into this. Should the rally amount be the same? Yeah, numbers for how the hedge. Hey, one at a time, okay, guys? Hang on. It's one at a time. Let me answer Gavin first. Gavin, can you hear me, guys? Can you guys hear me? Okay, good. So Gavin is asking about performance of hedge funds. Let me tell you guys, it is very painful to do analysis. I hate to do analysis, but I have to do it for my own purposes, all right, for my clients and mainly for my own. If you want to do analysis and so on, Gavin, I'm sure there are ways you can do it up to 2007 or whatever it is, all right? So you can go ahead and please, if you do, share with us, okay? Share the figures with us. But what I track is the hedge fund since day one, and number two, how does it compare to my personal fund? Okay, that's why I track it back to 11. That's when I launched my fund. Okay, is that okay, Gavin? Okay, you're welcome. Next question, please. Maybe another 5 more minutes, and then I'm gonna end this meeting already. Yeah, go ahead, Miss Wong from Sydney. Anyone has any question? The first question that's typed in, then I'll try and answer that. Should both our rallies so you guys should submit your questions front, you see. You have to no, they may not be the same, or they may be the same. Treat each portfolio individually, okay? Have your own personal profit-taking level for each portfolio and take action accordingly. All right, I'm going to address Miss Wong's question now. My entry is 454, the low is for blah, blah, blah. If I took 405K profit, this round is a loss. Okay, fine, so be it. Let it be a loss. How much do you lose? 406 plus 50,000 is about 456. You entered at 44. I don't think you lose much if you took it at 4 to 5K, Miss Wong. All right. I mean, we have made so many rounds in the past. Assuming this round you don't make much, you know, fine, fair enough. Not supposed to make for every round, okay? Okay, go ahead. Else, I can't see your thumbs up and all that, guys. Anyway, everybody can do their thumbs up. So, please go ahead. Yeah, take a small loss, right? You have to tell me, Miss Wong, what is your loss in percentage terms? Then we can address it. Okay, next, Simon says, how do you preserve capital to achieve high watermark? How do you preserve capital to achieve high watermark? Well, you trade with a good system and you have good risk management and you don't over leverage. That's how you continue to achieve a higher watermark. It's just as simple as that. I'm not quite sure if I answered your question, Simon. Does that answer your question? Okay, Simon, why don't we take this offline? Yeah, you can Skype me later. Gan Li Yi from KL, what are the analysis we should do? Don't do any analysis. If I didn't have to do this webinar, I wouldn't be doing this analysis. If I didn't have to present to my potential clients, I would be doing analysis as well. You don't need to do analysis, okay? I mean, of course, if you want to, you can. If you those of you who are crazy number crunchers, but you know, I hope I've given you enough evidence that number one, let's look at it. Number one, does trend following work? Yes or no? Does trend following work? Right? We know that it works, right? Definitely it works. Okay. Number two, do you have confidence in Michael's system? Yes. Even if it was no, you wouldn't say no, right? Oh, by the way, Michael is not here. Don't worry. He hates webinars. Okay, he gets confused with all the clicking and the buttons and all that, so he's not on this. All right. So if you have confidence in Michael's system and you know that trend following is the right way to go, so what are you going to do now? Relax. Just relax. Get on with life. All right. Find one turtle. Elijah, what kind of turtle? Yeah, just chill. That's right. The guys just chill. Drink wine. I'm with you. Inchi Abdul Hafid. That's right. And still market and sell chicken rice. Okay. Li Chiming, are you also selling chicken rice? You started a business with Brian, is it? Take flower bath. Oh, I see. Okay. Doing hanami. Okay, good. Smoke cigar. Okay. Okay, good. All right. So this is what I'm doing. Okay. I'm just chilling out. I'm just waiting. You know, eat durian. More baby turtles. Okay. Let's see what else. So what you need to do is two things. Focus on number one, managing risk. Okay. Who agrees that we should focus on managing risk? Please type your mood in and put a thumbs up for me instead of typing. Do you know my mood? Can you see on top of your screen there is a mood? Everybody give me a thumbs up, guys. Thumbs up, thumbs up. Yeah, man. Thumbs up, yeah. So managing risk. Number 2, manage your emotions. Right? The market is trying to scare us off. The market is, I'm not saying that, you know, we won't see any more drawdowns, but as long as we have our Renko, we will cut loss at 250 pips. The safety feature is there already. We won't be losing like 1,000 pips in one trade. Okay? Maximum is 250 pips cut off. Okay? All right, John. I'm actually also running off my time already. So you guys are okay, manage risk, manage your emotions, okay? And at the end of the day, enjoy long-term profits with total peace of mind. Okay? Everybody okay with that? Everybody good with that? Yes? Fantastic. Okay? Great, great, great. It's good to see you guys. You know, I see you guys, especially those who are outstation and overseas. I hope to see you all soon one night. I'll be back in Perth next week. So to the guys who are in Perth, let's catch up, play some golf, drink some wine, okay, catch up for coffee and so on. All right. Good night, everybody. Good night.